Hey guys, Matt here. So in my last couple of videos, I know I've been talking about, focusing on ETFs and all that stuff, but I also said in those videos that I want to take about 5 or 6 high conviction companies and maybe one spec company, and I want to keep those as individual stocks. And depending on the video and how things are going, I mean, the content of those 5 companies kind of change a little bit, and they'll probably change even more over the course of this year and next year, depending on how things go. However, there is a company that I always mention, and I bought some today, and I'm probably going to keep buying that company throughout probably January and throughout most of 2023. And that stock is Google. Now, I'm not going to waste this video telling you what Google is and all that stuff. If you're watching this on planet Earth, and heck, if you're watching this on YouTube, you probably know what Google is. So I don't need to tell you what a monumental company this is, how much cash flow it generates, the revenue increases, all that stuff. Yeah, you probably already know that. You probably already know that Google is an absolute madhouse. And what I want to talk about is the timing right now, because we are living in an era, a part of time, a piece of time in which Google is trading at a value stock. If you go down here right now, so current as of yesterday, Google is trading at a 4P of 16.5. Like, if you were ever, now assuming you're interested in Google, if you were ever in your life, like waiting on a time to buy a stock like Google, like waiting for it to actually drop and actually be a value stock, now might be that time. So if we take a look at the 4PE 16.5 and we compare that against the sector, so Google is in a communication services sector, the 4PE of that sector is 25.8. So it is incredibly undervalued right now by any stretch of the imagination. I mean, if we take a look at analyst estimates, now these need to be taken with a grain of salt, because who knows how this year is going to go, whether we're going to have more inflation issues, less inflation issues, we don't know. But if we take a look at the growth, we're talking 1.8% growth, which is not a lot by the quarter, but that's going to get better next quarter, assuming things go to plan. And we're talking a 10% sales increase by the year, which is, I guess, for this day and age, for this time period, whatever, is fine. And then a slightly less one of 8.1%. Was okay, so not the most expansive growth of all time, but it is a company that's growing. We are seeing some EPS shrinkage this year, which should start bouncing back as inflation dies down and all that stuff. And another point about all this is that, so the bad and good part about all this is Google's ad revenue. Well, Google's revenue is entirely dependent on ad revenue. And so this whole thing is cyclical, and we are in the right part of that cycle. When we're in bad economic times, the first thing a lot of companies do, one of the first things that get cut is the ad budget, because things are getting expensive. And once things come back, now we don't know when that's going to be, whether it's going to be after the Fed stops raising interest rates, after the Fed lowers it, maybe before that, maybe when inflation comes down on its own. We don't know when that's going to be, but at some point, the economy will become good enough or loose enough or whatever for companies to open up their ad budgets again. And once that happens, companies like Google and stuff that highly depend on, ad revenue, I mean, they're going to shoot up. So that's why you're seeing down here for EPS a shrinkage this year, and especially this quarter. But I mean, after that, assuming the economy is anywhere close to okay or getting better, I mean, we should see some very, very decent growth. Now, it's not the biggest growth in the world, but keep in mind, this is cyclical. The idea is to get in on the good part of that cycle. And we are most definitely on the good part of that cycle. So as far as my portfolio is concerned, now, I recently sold Revolve and put the profits into VOO. And so I put in a fair amount of money. So I think I have a good start on my ETFs. So I'm going to take some time throughout January, maybe February, and I'm going to start adding to my Google position. So yeah, just a quick update on where I'm spending my money. Anyways, take care, have a great day, and eat your vegetables.